Alright guys, welcome back to the channel. Welcome back to Rally Top Investing. Here we trade the markets using the order blocks, market structure and institutional order flow. We like to keep things simple, so please don't make your system harder at all. Alright, with that being said, let's jump right into our discussion today. In today's video, we want to consider the three most important things that you need to understand before you venture into trading the forex market. If you have no idea about these three concepts, you have no reason just yet trading the forex market. All right, and so what are these three important things? Number one, market structure. Number two, liquidity. And number three, entry trigger. Now we are going to break them down one after another, but before then I want us to go to the whiteboard and see what we mean by when we say market structure. All right, let's start with market structure. All right, so when we talk about market structure, we are talking about three phases of structure, talking about an uptrend, a downtrend, and a sideways market or consolidation. All right, now when we talk about uptrend, we are referring to something like this. All right, referring to something like this. All right, where you have the highs been broken. You want to see the highs in the case of an uptrend being violated. This high is violated, this high is also violated, but these lows must not be touched if this uptrend is going to continue. All right, the lows must be respected. That is in an uptrend. All right, but now let's look at a downtrend. Now in a downtrend, what we also want to see is price making lower lows and lower highs, lower lows and lower highs, with the lows being broken. All right, the lows being violated. Like in this case, the low is violated there. Now you have another low violated here. All right, but these highs must be respected. These highs, if this downtrend is to continue, the highs must be fully respected. Do you understand that, guys? Simple, very simple logic. Now in the case of a sideways movement, you want to see something like this in a sideways movement. All right, you want to see something like this in sideways movement. All right, this is what you want to see. You know, price is trapped in a range, like this. Price is trapped in a range. Can you see that, guys? So price is trapped in between this border high here and the border low. Price is just gathering dust here, it's not moving to anywhere. So these are the three phases of structure that the market will always print, and it is better for you to watch it and understand it fully well. All right, but in reality, in real time, how often do you see price? How often do you see price? Let's use black color for that. All right, how often do you see price do something like this? How often do you see price move in this decent and nice clean manner? Or how often do you see price move in a straight line like this? Not so often, right? The reality of the market is this: the market moves in waves, just like this. In the case of an uptrend, you find the market doing something like this. All right, doing something like this, moving up and down. Right, this is in reality how the market moves. Do you understand, guys? You need to understand this. This is how the market moves. All right, this is how the market moves in reality. When the market is moving this way, now it confuses the retail trader or the inexperienced trader to believing that because price is breaking the lows here in a lower time frame, it means price is going bearish. This is wrong. Price is not bearish. As long as price has broken this high here, indicating that we are in an uptrend, right? All this that you are seeing is what is known as complex pullback. If you go to our previous video on market structure simplified, I made it very clear that all you need to focus on is your swing high and your swing low, and wait to see what price action we do around the swing high and swing low. Now in this case, here is your most recent swing high, all right, before this break here, and here is your most recent swing low. All right, let's assume that all this didn't happen, right? Let's just imagine all this one didn't happen. Price is just creating this high and this low, and then you see price making this complex pullback. You don't think that is a bearish trend? That is not, market is not going bearish. You are waiting to see what price action will do around this your swing high or this your swing low. As you can see in this case, price went up and violated this most recent swing high here to form a new higher high. That's why in that video, market structure simplified, I said mark out your high and your low with horizontal lines and wait to see what price action will do there. If price breaks below this low here, then we might start looking for sell opportunities, depending if it meets our entry criteria or setup criteria. Do you understand that, guys? I need you to understand about market structure. Without a proper understanding of market structure, guy, do not, I repeat, do not venture to enter to trade the forex market, because your journey in the forex market can be quite excruciating. All right, if you do not understand this simple concept. Look at here again. This is our most recent high, right? And here is our most recent low. So you wait to see what price action. All this one, whatever that happens here is noise, guys. This is noise. Here is noise. All right, I want you to understand this. It's noise. What you are focusing your attention on is this swing high here and this swing low here. If price breaks above this swing high, right, it indicates that this uptrend is continuing. And don't forget, once price breaks above the swing high, all right, your OB will be sitting around here. Don't forget that your OB will be sitting somewhere here. All right, I want you to understand that, guys. So you want price now to rotate back down into this your OB. That is how to trade the market using market structure. You want to see price come into this your OB so that you can take price higher, all right, to break above this previous high. All right, that is how the market moves, and this is what you need to take your time to study. If you don't understand it, there is no reason for you to just start trading just yet. All right, now let's go to the next item. The next thing on our point is liquidity. Liquidity. What is liquidity? Liquidity is where large sums of pending orders reside. Large pending orders reside. That's liquidity. And there are 5 types of liquidity, but I just want to discuss these 2 types with you. All right, the 2 types of liquidity I want to discuss with you are these. Now, you have equal highs and equal lows, right? This is the liquidity, the first type of liquidity I want to discuss with you here on this equal highs and equal lows. This is what a retail mindset, a standard retail mindset, we call a resistance, and this is what a retail mindset we call a support. All right, and the market makers understand that. The smart money understand that one very well. So what do you think they will do? The retail trader, when they see, they have been wired to believing that this is a strong resistance, because price has touched this resistance 3 times and that price cannot break through this resistance. So they place their pending order here, all right, waiting for price to come back to this very resistance to drop. They place their pending order there, and where do you think their stop losses will be? Above here, of course, anywhere above here. All right, now the smart money understands that very, very well, and so what they will do is they will push price, all right? They will push price down to capture the liquidity resting below these lows here, and push price up to capture the one resting above these highs here, all right? Once they capture that liquidity, they now drop price. Can you see that, guys? Can you see that? I want you to understand that very well. That is the first type of liquidity I want you to understand. All right? Now, the second type of liquidity I want you to understand is the trend line liquidity. Now, price is making something like this. All right? Price is making something like this. All right? And the retail mindset will say this is a strong trend line. This is a trend line. All right? This is a trend line. Price has touched the trend line once, twice, and thrice. They say this is a very strong support, trend line support. All right? And the smart money understands that very, very well. So what do you think they will do? The smart money will push price down to capture the liquidity resting below here. All right? Immediately they capture that liquidity. What do? They push price up. All right? To continue with the uptrend. All right? So these are the two types of liquidity I want you to understand here. Now, the third type of liquidity is that liquidity rests above all highs and all lows. I want you to understand that. It rests above previous day's high, previous day's low, previous week's high, previous week's low. I have listed that in our previous videos. All right? But I just want you to understand that these are the liquidity we are looking for in the market before we take our trades. All right? Now, the final point we want to discuss here before we go to the charts, the final point we want to discuss is your OB. Your OB, I'm not going to go into details about your OB here, because if you don't understand, if you don't know about OBs, then you need to check our playlist. Go through our videos before you come to this one, so that you'll be able to understand your OB very well. Now, your OB is your point of interest, and you want to mark out your point of interest that has the most probable chance of working out, and that can only be from a higher time frame. So your higher time frame could be your daily, your 4-hour, or your 1 hour. Do you understand that, guys? So I'm not going to go into details about OB. We have lots of videos on the concept of order blocks that you can check. You can check from our playlist, right? So let's go straight into our charts. Now, as you can see, guys, as you can see, price was in an uptrend, making higher lows, higher highs, higher lows, higher highs, and then price failed to create a higher high. Rather, it created a lower high, and price came and broke this last significant higher low here. All right, it broke it to the downside and broke again to the downside. Can you see that, guys? I want you to understand that one. That tells you that structurally the market is now bearish. So the first point here is taken out. Market structure is the issue of market structure is resolved here. We are now in a downtrend. Do you understand? Now, the next point is liquidity. Now, take a look. When market broke structure here, it left an OB here. Now, we know that price will rotate back to this OB because we are in a downtrend. All right? We have already established our first point that we are in a downtrend. Now, price will rotate back to this very OB here before dropping. Now, what you want to see is to see liquidity engineered before your point of interest. If you don't find liquidity engineered before your point of liquidity, that POI might likely not work out. Do you understand that, guys? You want to see a grab of liquidity just before your POI or inside of your POI. Out of these two, scenarios, you want to see one of them played out. If you don't find liquidity capture around your POI, it is most likely that POI will not work out well. All right, so as you can see, there was liquidity that engineered here with this red line that you are seeing, this red bar. This was an engineered liquidity. Now the last point is your entry trigger. Take a look at this candle, guys. What do you think happened here? They push price up, market makers push price up. It was a blue candle before going up, and suddenly they started coming down. Leaving this wick here is on purpose. Now if you mark out this wick as your POI, if you go to smaller time frame, to lower time frames like the 1 hour, you will find out that this is an OB here. So you mark that wick out. You can mark out the 50% of the wick or the whole wick, and as you can see, price came, took out this liquidity here and bumped into this OB before dropping. Guys, you need only these 3 things to begin to be profitable in the market. Study these 3 things very well, understand them very well, and then you are good to go. All right, guys, we will draw the curtain on the video of today. But one more thing, guys, if you are new to our channel, please consider subscribing right away and hit the notification bell icon so that anytime we produce a new video, you'll be notified about it. And if you enjoy the content of this video, please give us a like, comment and share with your friends and families. And if you have not joined our free Telegram group, please do so immediately, because lots and lots of values are given out on that our Telegram page. I will leave the link on this in the description below. Just join right away. And we are planning to have a masterclass, but we have a condition for having that free masterclass. Very important for you to be part of that free masterclass. Please join the free Telegram group and you will find out the conditions for joining our free masterclass. All right, guys, I see you in our next educational video.